After being spun off from Lionsgate, Starz is embracing a leaner strategy as a newly independent, publicly traded company with a market cap of less than $400 million. The network plans to cut content costs, own more of its own shows, and pursue bundling deals with traditional players, all while focusing on its digital subscription base. Joining us right now to talk more about it is Jeff Hirsch. He is the president of Starz. He's also the CEO. And Jeffrey, thank you for coming in today.
Thanks for having me. Good morning. It's good to see everybody.
Actually done pretty well since you guys have been spun off independent. And by the way, this was a long time coming. What was it, 3 years in the making?
Yeah, it was about a 3.5-year journey to the separation. But I think the downside of having a long journey was it was a long journey. The plus side was we got to really plan for the separation. And so as you saw, last week, we announced 4 writers' rooms of Starz owned on Beat, which is a really important part of our strategy, which is getting ownership economics back into the business so that we can actually get some cost control back into the business, as well as create new revenue streams.
You've got a lot of things you're trying to do at once. I mean, it's pretty ambitious with things. I think part of it is trying to get the debt down, too, right?
Yes.
You want to get down to 2 times?
Yeah, I mean, I think, as a small-cap company, we looked at a lot of small-cap companies that trade on the NASDAQ and companies that are small but have over 3 times that don't trade very well. So the goal is to get down to 2.5 times very quickly. You are in an industry that there's a lot of attention and focus on right now. It's a small company. It's an ambitious plan of what you're talking about. But the reason I think we're interested is because there's so much happening in this space right now in terms of how you go about doing that. Part of the question is, how much do you spend on content? You want to get the content spend under control, but that's also like your biggest brand is making sure that you have new programming that people really want to watch. Yeah, look, the whole thing is based on content, right, and shows. And we have some of the biggest shows on TV right now. Outlander is a massive show. It's one of the biggest shows. We have a prequel coming in August. The Power universe, there's 4 shows that come out of that, are some of the biggest shows on TV as well. And so it all starts with great content. We'll continue to produce great content. 7 years ago, as we saw the consumer shifting to digital, we made a hard pivot into it. And so today, of our $1.4 billion of revenue, 70% is digital. 80% of our customers actually are some kind of add-on for us. So that means they're choosing Starz, which means our content is working. And so while the industry has changed and scale seems to be the name of the game these days, I think our size has actually been helpful because we've been able to pivot faster than anybody else and be more nimble that way.
Well, that's what I was going to ask. Do you see yourself being an acquirer of other brands, other titles, other assets, or do you see yourself eventually getting lumped in with somebody else? Because you're right, scale is the name of the game.
I think that's kind of a misconception that scale is the only thing that's important in the business. I think we have a very focused programming strategy around women and underrepresented audiences. And within those 2 demos, we are one of the biggest players, even though on a scale from a business side, we're not the biggest. And so we do have scale where scale matters. But if you look at what we've built, we're 70% digital, 20 million subscribers. We threw off a record adjusted EBITDA in the quarter of 92 million. We've been profitable the whole time. And we built our own tech and own our own tech. And so we have a scaled platform that will allow us to get bigger. And I think we're going to be in the conversation as the industry continues to change, whether it's we go look at linear networks that are marooned on the linear side that focus on our demos that don't have a digital future and haven't followed the consumer to the digital side. I think we can help scale those businesses on their behalf.
I thought you had an operating loss for the most recent quarter.
We had an operating loss, but an adjusted EBITDA gain of 92 million.
Adjusted basis.
Yeah, on an adjusted basis.
Trying to get to the subscriber growth. So you're just focused on the United States and Canada at this
Correct.
point. I think you think that's about 80 million homes as a potential addressable market.
Yeah, we think that, sorry.
Go ahead.
Yeah, we think the addressable market is about 80 million homes. We're sitting around 20 today. We just had, record subscriber growth in the quarter. We grew the actually total U.S. and Canada subscriber base, or U.S. base, about a little less than 2%, net of linear, and so that was a great quarter for us as well.
I just wanted to ask you just about the programming cost issue, which is, even though you have this sort of unique sort of space that you're living in, you're competing with Netflix and HBO and everybody else who's trying to buy the same stuff, right? And so in terms of creators and actors and directors coming to you first, what is the value prop to them in terms of how you're going to actually get the next great piece of content?
It's a great question, Andrew. If you think about what we do, we are so focused on women and underrepresented audiences. We're mature, we're adult, we don't have advertising. So we allow creators to really do things differently than the broad-based streamers that are focused on advertising right now.
And so as a mission-driven company, it allows us to bring creators to us because they want to be part of that mission. We see that with the hiring. We see that with content. If you look at, there's a book called All Fours right now that was just out, a very competitive book. We were able to win that book because Miranda July, who's the creator, looked at what we do and said, if my book wants to come to the screen, the best place to have it is Starz. We didn't outbid anybody else for that.
What are you paying these days on average, you think, per hour?
So we're paying around $7 million per hour. We think we can get that down to $5.5 million per hour.
And what do you think? I mean, I haven't looked at the numbers. What is like Netflix paying per hour? You think
I think it really just depends on the piece of content. If it's heavily scripted, they're probably paying upwards of 7 to 12. If it's a reality or a documentary, it just really depends on the content type.
How do you think you get that down from 7 to 5.5 million?
There's a couple ways to do that. One is you de-age the content. So right now we have a lot of shows that are in their 5th and 6th and 7th season. Yeah. Those are much more expensive than season 1 shows. And so we'll, in the next couple of days...
But they also have a track record.
They do have a track record. But what we've been able to do, if you look at the Power universe, we've been able to franchise core shows into spin-offs and make them work. And so we've been very good at that. That's why Outlander, the prequel's coming this summer. We feel like that's going to just take the audience and continue it. Raising Kanan, Force, Ghost, those are actually all bigger than the original Power. And so we have a track record of taking core shows, creating new shows, and spinning them and having them be just as successful. And we'll do that. We'll continue to do that. And so as you de-age content with shows that are around the same demos that we have the ability to take cost off the business as well. Because we're now separated from Lionsgate, we also can have international sales, which puts another revenue stream on the business, which gives you the opportunity to net that cost down.
You got to get bought, though. I just wondered, you need, someone wouldn't buy you now with all the debt, you don't think? Go on.
We're sitting with $600 million of debt right now. We generate $200 million of profit, convert that to about $7 million.
We're in the market for things, aren't we?
Oh, you mean?
Yeah, that's what I mean. Yeah, should we? It's got a name now, yeah.